All attendees are in listen-only mode.
Hi everyone, good afternoon. So this is one of our pilot webinars that we've taken off with Deepak Narayanan, co-founder and director, my CFO, who's joining us for the webinar. So I'll just set the premises for the webinar. It's since one of the challenges that all businesses face, particularly those on a high growth trajectory, is that finance and IT systems and account departments, they do not keep pace with the pace of the growth of the business. And one of the key ingredients to managing and improving financial health in companies, apart from managing funds better, is also to build fiscal discipline and better systems. So with these as the opening remarks, I'd just like to introduce you to our speaker for the day, Deepak Narayanan. Deepak is a qualified CA with close to 12 years of work experience in the finance domain. Deepak has worked with Deloitte and Ernst & Young in Bangalore and Mumbai. During his stint with these firms, he has worked with companies like Unilever, ITC, Sanofi Aventis, Western Union, Titan Industries, Schreiber Group, Syngenta, Solvay Pharma, amongst others. Deepak's company provides a service called MyCFO, which is India's largest and fastest growing service in the CFO services category. MyCFO works with the company from pre-revenue stage to mature and evolved companies, particularly those which are VC, PE backed. And Deepak blogs regularly. He has been speaker at various forums and entrepreneur events. He's well read and is a self-proclaimed sports enthusiast. Now I'll let Deepak to start the presentation and tell us a few words about the theme. And if you could just start your questions on the right-hand side, you can see on your screen. You could just start asking us questions. So let's begin this. Over to you, Deepak.
Yeah, thanks, Radhika, for that introduction.
Yep.
Good afternoon, everyone, and welcome to this webinar. Thanks for sparing the time on a busy Wednesday afternoon. One thing before I even start off is to say that if during the course of the webinar, if you guys have got questions, please do write those questions on the pane that you see, and then we would be in a position to take up. I'll possibly answer all these questions once the presentation is done. I expect the presentation to be for a time frame of say 35 to 40 minutes, and leave the last 15-20 minutes out for Q&A. Okay, so without much ado, let me get straight into the presentation. So just taking off from where Radhika just left on the need for finance and accounts department or the F&A function to effectively play a support role to growing businesses. One thing that we have seen across all growing businesses is a need to have an effective financial management. Right. So this becomes particularly true for growing businesses, simply because growing businesses also require better financial management, helping them to make better informed decisions, and also to look at new opportunities. So some of these things are currently missing in a large majority of growing businesses that at least we have come across. However, whatever is the business, I think raising finance, managing cash flows, implementing systems and processes all become essential. And this is also true for growing businesses. Sophisticated financial management or managing the financial health of a growing business can be quite challenging, right? And this actually demands specialist knowledge and expertise, which are not readily available today, and they're also not cheap. Right, understanding the ever-changing environment, priorities, and also the best ways to build these capabilities that actually matter to the evolving needs of some of these businesses are becoming increasingly crucial for businesses which are fast-growing. Right. So let me take you through the contours of the presentation. So what we are going to be covering over the next 30 minutes or so would be on these on the 4 points that I've actually put down. The first being cash is king, building reporting capabilities, building the right F&A team through the CFO, and measuring your business performance. Right. So each of these we believe are relevant to the topic on hand, which is managing the financial health. Since managing financial health doesn't necessarily and only mean managing cash flows and raising working capital or raising finances. it also means what are the ways and means in which finance teams and particularly the CFO's office would aid the entrepreneur or the promoter in being able to measure business performance. Secondly, what are the basic or the inherent systems and processes that one needs to put in place, so to be able to help entrepreneurs scale up their business. And thirdly, what is the right kind of team that the F&A department should be building, again from the scaling up standpoint, right? So these are the 4 things that we would be covering. So cash is king. I mean, this is something that all of us have been hearing, and of late we have also been hearing that Singh is no longer king, right? So I mean the Prime Minister of this of our country, but so is oft said. Cash is king is almost become a cliche. While I understand that customer for most of us or for all of us is still the king, and most businesses or majority of businesses revolve around the customer being at the center. There is more than one other important player in this royal court. If you consider this to be a kingdom, then you've got another important player, right? Since business financing always holds sway over the business owner, and that is cash. So let me give you let me kind of give you a bit of a case study on this. A company that I came across some time back or very recently had actually used valuable working capital to fund their long-term facility or rather their technology platform. So this was a company in the e-commerce space, and they had used up valuable working capital to fund this. So so what happened as a result of this was, when a few short-term operational issues actually arose, which was actually relating to customer payments not coming on time, some issues around delivery of what was committed to customers, the company was actually left with a bit of a liquidity problem, right? And that is a problem that I think could have been avoided with better financial management. So what's the solution when companies actually get into these kind of issues? I think solutions could be multiple, but what we have suggested or what we have implemented or what we have seen better managed companies do are multifold. So one thing that better managed companies actually do would be better customer and vendor relationship management. So this would typically mean, how do you make sure that your credit terms or your credit controls are in place, right? So if you are with the involvement of a good quality finance team or with the involvement of a CFO, clearly you can set the limits as far as credit controls are concerned. So if somebody is paying you at 90 days, can you get them to pay at 60? Easier said than done, but somewhere you've got to take the first step in order to make this happen. Similarly, your vendor relationship management. Are your vendors, are you actively giving information to your vendors, or are you partnering with your vendors to make sure that you are working with them towards a long-term objective, a collective objective, right? So again, can you actually push out some of the payments that you're making to some of your vendors so that your cash flow cycles are better managed? The other thing that we have seen especially with some of the growing businesses is a facility that they use with bankers, and which bankers extend today, is something called as trade channel financing. So the way this works is, if I'm the supplier, if I'm the company, and if I've got the customer, so effectively what I do is start shipping things to the customer, but I go and approach a banker, but I don't get the working capital limits in my books, but I rather get it in the books of the customer. So effectively it acts almost like a factoring kind of a model, where if I have maxed out of my debt or my working capital limits, then the customer effectively takes responsibility for the working capital repayments as far as the bankers are concerned. But internally, I think there is a clear-cut understanding that for the gap that is available to me I would reimburse the customer a certain percentage of the interest that that the customer ends up paying to the bank, right? So what it does is, for me to be able to get the funding out of the customer almost immediately, since this would work on a factoring or a bill discounting basis, and for me to then pass on some part of that benefit to the customer in the form of better pricing. So on one hand, it helps me to get my cash flows organized much quicker. The other thing that we have seen a lot of companies do is long-term equipment. I mean, to get into deals like equipment financing, right? So where again you don't fund the purchase of equipment, but you get an asset financing company to do this for you. So that works well again in terms of squeezing cash flows out. From an operational, completely operational standpoint, and again to save some bit of capex, we are seeing a lot of new age enterprises today adopting something called as a BYOD, bring your own device kind of a scheme, right? Where the company extends this scheme to all its employees, wherein the employee funds 50% or a certain percentage of the cost of the equipment, or even 100%, and then the equipment gradually transfers into the employee's hands over a period of time. Right, so again, it helps the companies to keep a check on their cash flows. So these are some of the smarter ways in which companies operate, which all leads me to questions on how much working capital does your business really need. So these are questions that as entrepreneurs or as owners of companies or even as CFOs we need to answer. Can the business actually withstand a short-term operational or customer issue? Am I using my working capital to fund non-variable operating expense? Very, very important, because if I'm using it to fund all the one-off expenses or even capex, then I'm going to get into big trouble. Where is the working capital getting tied up currently, and how can I unlock it? So these are some of the ways in which, as I discussed a while back, these are some of the ways in which you could actually unlock it. Okay, the second thing that I would like to touch upon is how do you build reporting capabilities, right? At the end of the day, I think all of us, though, have got good quality or reasonable quality accountants working for us. The missing link today is are you getting information that could be used or that is valuable to take business decisions, right? By default, all of us know that accountants are experts in postmortems. So you don't get any kind of reports that allows you to analyze or give you a trend as to what is going to happen in the future, or neither does it tell you anything about the future. And which is where I think somebody who is a little senior up in the F&A structure, whether it's a finance controller or a CFO, could come in handy, because somebody like him or her would throw light into dark rooms, right? Light into rooms where people have never treaded, have never gone. So how do you get this done? So the first thing would be to get your basics right. So this would be, let's say, getting a finance tracker or getting a compliance dashboard. So we have seen companies which use dashboards which have got a traffic light kind of a mode, you know, where you could actually point out as to what compliances you have not been you have slipped up, what compliances you are okay with, and what compliances you are always doing on time. So some of these things, though they sound very simple and innocuous, go a long way in providing visibility. Similarly, things like how do you put credit controls around on customers? How do you ensure that debt collections are on track? Are you getting your AR statements regularly? Similarly, things like expense runways, right, or cash flow forecasting. So these things become very important in businesses that suck a lot of working capital or that suck a lot of cash, and which are not profitable, and typically happens in the case of investor-funded companies, where a PE or a VC has put in this money, and you actually need to know when this money will when you will run out of this funding, so that you could either go back to your PE to ask for a second round, or you go to another private equity investor. So these are basic things, but very, very important. The second point is on this whole aspect of budgeting and forecasting, and it's getting very, very important, especially in companies which are looking to professionalize, in board-run companies or in companies where there isn't where investors have got involved, right? So what does it really mean? It means you're building not just a business plan, but you're also building in sensitivity analysis into this business plan, right? So if you want to change certain assumptions within the business plan, you basically need to build those sensitivity checks so that you are able to see how the plans would work in case a certain scenario works or a certain scenario doesn't work, right? As in life, even in business, nothing is black and white. So there are always elements of gray, which you need to factor in and bring. And building sensitivity analysis allows you to look at those situations. The second thing would be a very robust annual budgeting and forecasting process. So when I say annual budgets, this would involve looking at budgeting across all your functions, and how these budgets come together from an organization standpoint, right? From an entrepreneur or from a CEO standpoint. Similarly, not just with budgeting, but you also need to make sure that when you start plotting the actuals against some of these budgets, are there going to be any changes or changes to the budgets itself, right? So for instance, the budgets that you would have prepared 12 months back, given today's market volatility and environmental conditions, should you be looking at a rolling forecast? Okay, so every quarter you do an actual versus a budget, and should you be taking the new actual as a budget for the next quarter? You know, so these are some of the things that companies are coming up with, so that there is more predictability in the way some of these exercises are run, and these are not merely spreadsheets which you see. The other important element of budgeting and forecasting would be for companies to be able to look at stuff from a long-term investment decision-making standpoint. So what is going to be the payback on your investment? What are your IRR calculations? What is going to be am I going to utilize my asset to an optimum level, right? So what is the return on capital employed? I think these are parameters which are getting increasingly important for businesses to start measuring and tracking. The last bit on this slide is on commercial decision making. Again, a massive gap, right? So you've got an abundant supply of people who could give you advice on accounting, but commercial decision making takes the cake when it comes to not having adequate, good quality advisors around, or having adequate people around. So what does it mean? This could mean things like getting involved in commercial discussions, whether it's your vendor, whether it's your customer, whether it's a new store that you would want to open, whether it's negotiation with a franchisee, so on and so forth. So anything that has got a commercial implication, involvement in a commercial decision process is what I mean by commercial decision making. Similarly, if you want to get a new product developed, then what is the implication from a tax standpoint? What is the implication from a pricing standpoint? What is the implication from a market acceptability standpoint? Forget the marketing side, but what is it from a financing standpoint? What's the implication? So these are stuff that one has to keep thinking. Similarly, impact of taxes, impact of hedging costs. So if you've got forex exposures in your business, then what is the impact of the cost that you pay on hedging on your pricing? Right. Similarly, if you've got bank guarantees or LCs working for you, then are you factoring these costs as part of your pricing? Are you factoring working capital cost as part of your pricing? So these become extremely important for you when it comes to taking decisions on business, and all these have got an impact on the financial health of the business, right? So any wrong decision that an entrepreneur or a person at a CXO level takes has got ramifications all over. Similarly, what would be the if you're going to make investments, then what is going to be the structuring? I mean, how much of it should be through equity? How much of it should be through debt? Are you going to get money from overseas? Is it going to be locally funded? So there are thousands of things that one has to look at. Which brings me to the third point, and which is building the right F&A team, and this has got a massive role to play, in determining the financial health of any organizations. I think most organizations build teams for today, right? So if I am a 100 crore organization, I always say that, look, let me get somebody who can manage my pain points today. But we very seldom realize that all of us are growing businesses, and at some point in time or very soon we are going to be growing at a massive or a rapid pace. So what happens if we grow at that pace? Then are we saying that we are willing to change the people whom we recruited today in the next 12 months or in the next 15 months time? Looking at track records of Indian businesses, I think we have got a high propensity of not to sack people, right, for non-performance, and which is fair, because you cannot sack somebody because you hired them for a requirement which was completely different 15 months, 18 months back. So how do you balance this gap, right? So things like that is what you have got to look at. So look at existing, when you are building the right F&A team, try and bring a CFO or a finance senior guy there who would then man the department for you and who would build a team for the future. So basics like looking at existing job descriptions of people who are working within the F&A team, looking at their skill sets, whether they would be whether their skill sets would be adequate to look at the next level of organization growth. Deciding on what kind of people would you hire, not just from a skill set standpoint, but also from an attitude standpoint. Reskilling them through either through training interventions, getting specialist people involved. So, for instance, I mentioned about this commercial role. So do you need somebody who does only commercial, who plays a role on the commercial side? You need somebody to manage credit controls, right? So these are questions that entrepreneurs, CEOs, and businesses need to think of. The second thing would be that I would encourage would be to build a strong F&A and IT roadmap. See, what this does is to actually set in context as to what is the expectation that business has from F&A and IT as a function, right? So do you want F&A to play a very active role in the business growth, or do you want F&A to remain passive? So both situations are perfectly okay, because in some companies you may consciously take a call that F&A does not have a very significant role or does not have a partnering role as far as business is concerned, and you can leave it that way, right, till it actually acquires a certain critical mass. But in most growing organizations, the biggest gap, as we touched upon earlier, would be that F&A and IT is not keeping up pace with the growth that business is looking at. So having an roadmap over the next 12 to 18 months time, and having things like building internal controls, bringing in an IT system, including an ERP, it could building in a business intelligence tool, or building in risk management frameworks, right? So these are things that could be extremely important. Similarly, and that brings me to the third point, which is to look at the CFO as a quasi CEO, right? So today, I think the CFO occupies the place next to the CEO in terms of merely the power and the position that one occupies within the organization hierarchy, right? And there is a reason for it, right? Because as I said, the role of a CFO is more forward-looking than that of an accountant, which is more of a post-mortem kind of a job. Right, the CFO also actually plays a very important role in terms of being a sounding board to the CEO and to the business, right? Because the CFO comes from a he's an insider to the organization, but also plays a fairly outside role in the sense that he's not involved in some of the other functions as intimately as some of the other functional heads or even the CEO, right? So he's able to give you a view which is fairly dispassionate. Thirdly, I think the leadership role that a senior finance guy or a CFO would play cuts across all functions within an organization. It's not just limited to the F&A agenda. Building a team, training them, managing these teams also becomes a huge part of a CFO's role. Similarly, the other big thing that has come up particularly in the last 8 or 10 years time is to manage investor relations, be it a public limited company, or be it a private equity invested company, or even be it a company which is board run or professionally managed, right? So essentially boards are looking increasingly at professional managers and more importantly CFOs to come and communicate the business performance from a finance angle. Right, because most boards and investors believe that that the level of objectivity or the ability to articulate something without being too linked or too influenced to the business comes naturally to a finance guy and especially to a CFO. So increasingly that sphere of activity from a CFO standpoint is going up. Lastly, I think the CFO is not just required to look at your finance, but he or she is also doubling up as say the chief risk officer, right? Today, I think managing risk becomes a key aspect of a CFO's role. Similarly, chief residual officer. This is something that has been coined very recently, and I think it's fairly apt because some of the functions that most people may not want to take up across functions within an organization, it ends up on the CFO's lap. So this could be an IT implementation. In a lot of organizations, even HR, CFO is actually responsible for the HR function. So apart from being a good finance guy, a CFO also tends to play the role of a risk officer or a chief residual officer. Right. Managing your business performance, the last slide before I open it up for questions. See, one thing that most entrepreneurs grapple with, or most companies grapple with, is what is the how do I actually measure my business performance, and more importantly, what are the right metrics for my performance, for my business, right? So so different companies have got different metrics, and some could be basic like a P&L, balance sheet, a cash flow, cash and bank balance. Okay, this is how most Indian businesses were run before this whole influx of professional management, right? So every entrepreneur wanted a bank balance to be given at the end of the day, right? So that was the pulse. That's how they used to measure it, and I think it still continues to be the most effective way of measuring the of managing the business. Similarly, things like accounts receivable, expense runway. So these are some of the basic stuff that that businesses should actually look at as metrics. As you grow a notch up, businesses also look at your debt equity ratios. It could be debtors to days ratio, it could be return on capital employed, it could be inventory turnover, it could be gross margin analysis. Some businesses and even some CFOs or finance teams also help in measurement of metrics on the sales side. So this could be size of the pipeline, of size of the sales pipeline, could be conversion ratios, could be cost per click if it's an e-commerce business, could be cost of client acquisition again if it's an e-commerce business. It could be revenue per employee, profitability per employee. This could be delivery cost by order, right? So there are a whole host of matrices that people are measuring, and none of these matrices that I'm talking to you about are just pure accounting matrices, right? They are all business operating matrices. Similarly, things like a lot of the evolved companies actually measure matrices like product profitability, customer profitability, return on investment. A whole lot of them also invest a huge amount of money in business intelligence tools and on the dashboarding things, right? So as a CEO, while you do not have too many, as a CEO, you've got you're always pressed for time. So how do you get your finance team to deliver all that you want to see in a visual form rather than in an Excel template based form, right? Because the Excel sheets are quite complicated for people to understand. So that also tends to be, I mean, that's a dashboarding itself could be an area, where which will help business leaders to take decisions quicker, and all this naturally has got an impact on how they manage the financial health of their organizations. The second one would be investment in processes in IT. I think huge gap. I think all of us are aware of the opportunities, rather than opportunities, the gaps that exist today in virtually every business, in every growing business on the processes side. I think I've said enough about this even during this presentation. And lastly, I would say management commentary. Again, this is more from how do you enable a CEO to take decisions on the basis of a short report which contains what the business performance has been and what the outlook is going to be over the next quarter or over the next 6 months time. Right? Again, a huge role that that a finance professional could play. Right? So this could be basic variance analysis. This could be business analysis. This could again be use of dashboards. This could be in terms of presenting your or the business or the collective opinion of the business on how certain things have impacted the business over the last quarter and how it's going to pan out in the next quarter, right? So this becomes a huge area, and this is a huge area, and again something that goes a long way, in ensuring that promoters or CEOs are able to take decisions on the basis of management, good quality management commentaries. Right. So with this, I would say that I would like to end this presentation, and I would want to take questions from your end, because I think the questions, if the questions are specific, then I would be able to give you specific answers as well based on some case studies or some kind of experience that we have had. So thanks once again for this patient hearing, and yeah, look forward to your questions.
Hello. Hi, Deepak.
Yes, Radhika.
Yes, so we have a few questions with us. Mr. Maulik Shah has written into us. He's asking about, so he works for a pharma company as GM Finance. The company has performed well so far since they started the company. It was a year before. So he's asking what sort of skills apart from subject knowledge would lead to new level successes?
Right. So when he says new level skills, is he asking this from a finance standpoint, or is he asking from an overall organization standpoint?
We from an overall organization standpoint. He's the general manager, finance and operations. So sort of skills apart from the subject knowledge for new level successes is what he's mentioned.
Sure. See, I think most growing organizations neglect one thing, which is to build their mid-management teams. Right. So you always got somebody who's fairly strong at the top, and you've got a bunch of people who are operating guys, right? But you don't have an effective mid-management team. I think if you were to pick one skill, one thing that you would like to build in a growing organization is to build or is to beef up your mid-management team. What I mean by mid-management team is say have somebody to head your marketing, somebody to head your sales, somebody to head your operations, somebody to head your HR, somebody to head your finance. I mean, finance, you are already there. But to start at that level and then to be able to drill it down to multiple levels within each of the functions, right? So if you've got yourself in the as GM Finance in your organization, then probably to have a team below you who can support you, right? So all this should be kept in mind in the context of the growth path that the organization is charting out in the next few years' time.
All right. There is, I hope we've answered the questions. And there's another question from Doraswamy Nesanuru. He's asking that he needs some financial assistance for his company. So what is the plan for this requirement? So if you could just probably share your email ID, maybe you could take the discussion forward.
Yeah, that's right. So since the question is fairly generic, and
yeah.
I don't know too much about this gentleman's company.
Right.
So what I would suggest is for Doraswamy to look at the screen. My email ID is there.
Right.
So to write to me, and then I'll be able to answer.
Okay, great. So far these are the questions that we've received. And also one thing to all our attendees that the webinar will be live in a few days time on YouTube as well. So you can comment there. Also you can write into Deepak at wealthtree.in for any questions. So do we wrap up with that, Deepak?
Yeah, if there are no more questions, we can wrap it up.
None so far.
Okay.
All right.
Thanks everyone.
Thank you.